56. Okay. If we just gap down on futures, okay, you can take risk at 57.32, 57.33, expecting them to reclaim that pivot because you know you have support of the NFP low print at 57.29.4. Your risk is 1.4% or 1.4 points. That's POTUS. I mean, I mean, an asshole can't pucker up tighter than that. That's really fucking tight. That's a good tight risk. 1 point is insane. So you take that long, it breaks below, and it starts to weaken. You cut it, and then you say, okay, I'm going to take this thing short, right? And I'm going to risk. You're neutral, right? You're not bullish. You're not bearish. There's no blah 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 blah. It's no, okay, well, this pivot, I'm going to take this long. My stop's going to be right under this place because I can define my risk super tight. And we are a little overextended to the downside, and they could snap people back trying to chase the short. That's a possibility psychologically, right? So, but they didn't. They chopped it around and then they broke the pivot low, so you could have taken it short. Actionable trade. Then you define your risk right to what? A 5-minute close above 59.29. Right? 59.29.4, the NFP print. So you take it short and now you're chilling. Obviously, you just caught whatever, a 7-8 point move down. Then, you take a little trim. You're probably making 25-30% on those trims, right? After you've taken those little baby trims, okay, then you let some ride. But with that in mind, you have to understand, okay, there's this space up here that has not been tested. This space has not been tested. Okay, we'll call this the what did I call it, Clay? We'll call it the Tingleberry. Yeah. So as you start overextending down, right? Yeah, the Tingleberry. We'll call it the Tingleberry. So as you keep overextending down and away from your EMAs, right? So if price is, you guys are probably like, what the fuck is this guy smoking? No, but seriously, you have, it doesn't matter what the hell the name is. It could be called SMT, DMT, PCP, whatever. The point is EMA's right here, 15-minute, 5-minute, doesn't matter. EMA's right there on the 15. You just shot down here. What's the likelihood of continuation? You just caught a short, it's popped there, you're up 25%, you scale, 70%, you put your stops in a break even. Now what? Now what are you looking for actionably trading? You're just basically looking at structure. Okay, they could close a 5-minute tweezer here, and then they could reclaim this and go back up and backfill this. You have to be thinking that. Why? Because the Tingleberry, yeah, the EMA's up here and prices down here. We have a huge Tingleberry that's happening here. Your asshole's puckering up because you know that the snapback could come really fast, right? It could go reclaim and go, right? We want to be mindful of that. Very, very mindful, right? When you're mindful of that, that makes you understand and focus on what pays. What's going to pay? Understanding structure and how price is moving within the structure. Right? We already know that there's a lot of space up here above us in this gap that just gapped down. Okay, let's see how this candle forms. Is it going to be a tweezer bottom? Now, if it is a tweezer bottom and we're in puts off with a little bit of short and we already scaled at 25%, that's okay. We can lock all our profits in and be green as hell. Or we can say, you know what? It could bear flag out and flush even lower to the lower spot here. So maybe, you know what, I made my 25% on 70% of my position down here, right? And I'll leave my stops in at break even, and they have to reclaim the 59.29.4 pivot, which is a NFP low. And then I'm going to let this shit ride, and you never know, right? And look, now they're fucking, finishing the candle close out, and they could overextend it on the Tingleberry. And then the Tingleberry gets going. And then the further the Tingleberry goes, the more you got to okay, well, now I got 3 contracts out of 10. I better scale another 1 here, maybe another 2. Or you know what? Fuck it. I'm going to lock it all in because I just made 70, 80% on this little Tingleberry, right? So, any questions on the Tingleberry? It's a new name. I'm naming it. I'm not gonna call it what everybody calls it in the statistical information that it actually is. It's just not gonna happen anymore. So my son does when he drinks water. He goes, fucking hilarious. It's really funny actually. And then he smiles as he does it, like he knows he's a funny little dude. But so, like, do you guys really, really, really understand what I just explained there? Because even though the whole piece wasn't recorded, no, they're not. No, I'll tell you how to do that right now. But do you guys understand the trading strategy that I just fucking described? Because I'm not I'm not joking. I'm not joking about this. Yeah, I'm calling it the Tingleberry. That's funny.
No,
But
because I
y'all
just joined.
know
Good
what the
afternoon.
fuck it is. What's up, buddy?
You mind repeating? I literally just logged in.
You already
Sorry.
know it. It doesn't matter.
Oh, I know it. Okay.
Yeah. I
Oh.
just
Oh,
renamed the golden goose the Tingleberry.
it's a Tingleberry now? Okay. Got it.
So I'm being honest because you know I'm only giving we're not recording I'm not recording certain things. And that's fine that the recording says this because maybe if people see this, then they may actually show up to the actual EDU. But the people that deserve it, they're getting the sauce. Like they'll get the sauce, and then it will be recorded, and that's just the way it is. We got people in here, and I love the people in here, and they can listen to this recording, and that's fine if they want to listen to it. But they work. I have a couple friends that work for other servers or own their own server in here, and that's fine. Hi guys, you know, but you're not going to be stealing my shit because I know my shit's starting to move out. Okay, so it's just that's the way I roll. You don't. So, anyways, now I just really want to make sure you guys understand fully how to trade this because this one simple fucking strategy. If all you have to do is be patient, you have to be patient and wait for it to set up in a manner where you have defined your risk so fucking tight that you can chill. And that if this breaks this level and doesn't reclaim, you know what to do. You can flip short or flip long, or, excuse me, or you can wait for the next pivot or the next spot to set up. But you're playing it off the Tingleberry. That's the key point. It has nothing to do with, you know, divergence or this or that or blah, blah, blah. Those are all confluences. Okay.
May I ask why you named it Tingleberry? Because that sounds very similar to Dingleberry.
Because it makes your asshole pucker when you get in a trade, right?
Noted.
You know, it's like, hey, he's like, hey, we're going down, guys. We're going down. And then you're like, oh shit, I'm gonna buy calls. Oh my god, this is nerve wracking. And then all of a sudden it chops around, and then all of a sudden, boom, boom, and it rips, right? Like that's how it goes. Like let's do a little quick recap of last Friday. Okay, this is what we did. This is a dirty call, right? This is not the Tingleberry. But pops up, drills, here's our pivot we defined, breaks the pivot, Vana flow pivot, tries to reclaim, fucking drills, double bottoms, reclaims, alert, right there was the alert. You can timestamp it actually. Well, actually, no, you can't because I did it on live because I don't want people stealing my shit. But yeah, that was another thing I was going to drop on y'all is, yeah, I'll be doing SPX multi DTE alerts, but zeros on massive fucking reversals and stuff, that's going to be on voice. Sorry. Just the way it's going to be. But if you know this, you'll know if I give a multi-DTE alert, like, hey, 5850s for Monday, and it's down here, it's probably, you should probably take some zeros too. You know what I mean? Right? Because hey, if you can define your risk, why not? But here's the key point, right? Yeah, they got a what do you call it? Um, a spinning top that just printed, and that's a reversal. So if we take a look here at what Wiley's talking about, now what do? We could take calls here, defining our risk. Give me a candle close right below this zone. What's going to happen? Snap back, probably backfill this shit right back up. Trap people down in the hole, fuck off, and we're going to screw you up, right? And then that they probably will do, honestly, based on this move down, they'll probably reclaim, bring it back up, hold it, flag, and I bet you if you check the tape's showing some stuff too. You know what I'm saying? We're not going to get on that yet. We'll get into some of the sauce about the tape another day. But so Friday breaks the pivot. I know this is a big Vanna flip. Tries to reclaim, gets stuffed, comes back, holds, and I'm like, all right, we're long right there. And that was at 82 to 85. We longed live, and we did not flinch until 50. You know, that's an 80-point ripper for the whole team on a week out or zeros. That's, you know, it's these types of moves that I continue to expect to see all the way into the second week of April. I don't think we're going to see then I expect volatility to really get fucking stuffed. And you won't be seeing these crazy moves. I don't expect that. So we want to take advantage, and you really, 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 really need to not be in a rush to get into a trade, but to understand, can I define my risk? Okay, has he alerted SPX off, you know, okay, great, he has, awesome. Is it early in the morning? Typically what we've been seeing is our alerts like this one, early in the morning, we got in right here at, you know, roughly around 25-ish, maybe I think it was 30 hold or something like that, and then it ripped up to, you know, 70 roughly. That's not a bad move. I mean, it's a pretty solid move. It was like 50-60%. That's nothing to, you know, slouch at. This move was dirty, this move down here. But you know, you catch this move, look what happens. You got the Tingleberry, right? You know, yeah, it happened there, you know. And when you get that situation that creates, you know, you got to be careful. If you're in puts, you know, you're going to get stopped out right there. Maybe, unless you don't have stops in, then you can just keep riding this thing down. But you should be scaling into the strength of this move, overextending into a big spot. You know, those. So here's a good little tip too. So if you got puts here, let's just say you do. Like I think OB took them, and I said, hey, hedges are not bad here, but OB took puts here. Okay, let's say you top tick them. Comes down here. Now they're 200%, 300%. Then it gets this move, and those puts are at 500-600%. If you do not scale here, right here, you're a greedy MF. You hear me? Stupid. You should be at one left here. This is why. By the time this thing shoots up and then flags here and gets down here, they're worth the same fucking price. Guaranteed. Maybe 60% more. Maybe. Do you guys understand why that is? Throw a 2 in the chat if you don't. You're not allowed to vote, Big Pop. I'm just kidding. You can vote. You can vote. Yeah. It's pricing in the move. This move right here, this speed move right there, is pricing in. It cannot price in the actual price of the contract based on the speed and the velocity of that move. So it's overpricing it, right? Because if the price moves really fast down, the contracts have to speed up, meaning increase in what? The volatility. So there is such a thing, it's called vol on vol. Vol on vol is the volatility on the IV, implied volatility, IV, of the option. You have IV, you have delta, you have gamma, you have theta, you have all these derivatives of an option, right? And so it's really important to understand why you're going to scale out when the market shoots down explosively. You know, for people that hold this through this, they're done. I mean, your options go from, say you get here, you know, you're at 200%, you know, 500%, and on this move right here back up, they'll lose 200% in value. So you're at 150% value. And then what are you going to hold through that? Yeah, bullshit. You know, most people don't have the nuts to hold that. Like they don't. You know, they're, oh my God, I'm gonna go red. But we're still in a downtrend, right? So, but if the intelligent trader is like, okay, I got in here. Okay, let me wait for the break. Boom. All right, I'm out 80%. I'll let my runners go and I'll put my stops in at break even. Right? And then they move, and then maybe you get an extra 50% out. You see the reclaim, it starts to chop here, and you're out. You're like, okay, well, let me look to, you know, play a reversal or something. That's how you really want to be trading your stuff. Even like on a typical ticker like Apple, Microsoft, MSTR, you get a quick move, boom, you're up 30, 40%. Take 70% off. Put your stops at even. You don't get hundreds of percent on a day trade typically on a ticker other than 0DTE. You guys get that, right? Like if we trade Tesla, Meta, whatever, you know, if you take 30%, 40%, that's a hell of a fucking trade on a weekly contract, whether it's 2DTE, 3DTE, or 4DTE, or 5DTE during the week. You got to take that, lock that in, because you know the move that you need on a 0 versus the 1DTE versus the 4DTE is completely different. And just having the awareness and not being greedy, there's so many people that don't even know how to manage a fucking trade. Meaning, how do you manage a trade? Number one, all right, let's take today. Let's take right now, this moment. We took puts off this spinning top on the 5-minute, right? Or sorry, calls. We got in here, right there at, let's say, 22, and we're up 5 points. And our risk we defined as it needs to close below, you know, 17-ish, right? Right in this zone. It needs to get back below it for us to close the puts out. So we do have a little risk. That's 5 points of risk. And we're expecting it to reclaim NFP low, test it, get back up, and work and backfill this space here we talked about earlier. Right? So there's everything is defined. Okay. And as we manage the trade now, the most important thing is understanding, number one, where is my stop? My stop isn't based on price and value. It really shouldn't be. It can be if you have a smaller account. If you have a smaller account, you should be stopping out at like 10, 15%, right? Because it's easy to take a 40 or a 20 to a 15, $20 loss as opposed to like, you know, oh, well, it didn't break my level, and then all of a sudden it broke my level, and because of theta and all this stuff, I'm down, you know, 30, 40%. Like you can't absorb a loss like that when you have a smaller account. But if you have a medium-sized account, okay, and you're like, okay, well, I got in here at 22, you know, here's a spinning top on the 5. I'm going to define my risk at the candle close below the candle open of the spinning top, which is roughly at 18 to 19. If we hold that, I'm good. And if I get up 30, 40%, I'll trim. If I get 30, 40% and I trim, or we can't reclaim what? This pivot here at 29.4, I'll get out because it's weakening. So now you're up 5% and it's weakening. You should cut it. These wicks are nasty. You don't hold for hope like most people do and be like, oh, well, you know what? It could go up. No, motherfucker, it ain't going up. That ain't going up. It just had two nasty freaking wicks. This is the difference between hope and reality. Okay, this is hoping. Why are you hoping? Don't do that to yourself or your PNL. It's better to close a trade out at break even and stop out completely, zero, and take that money and put it in your bank account or your stock account for tomorrow. Then to hold and watch this thing drill, and now you're down 20, 30, 40, 50, 60. Oh, shit, what do I do now? That's stupid. We can't do that in here at all. That's just not it. And you know what? Say you stop out and this thing fucking goes like this. Boom. And then you say to yourself, oh, well, if I would have held, fuck, I'd be up 10 grand. Yeah, that's good to actually reflect psychologically on the trade. And then you say, okay, you know what? What could I have done better as a trader to have managed that trade based on price action and not my emotions to make that 10 grand? Okay, well, what does Sells always say? Well, I want to see a 5-minute close below the pivot, right? Below that doji, right? But if I have a small account, I need to be locking in that money and protecting my risk. So if I get stopped out, I don't get the move right away, that's okay, right? Because really, if you're in a smaller account, you want to be watching price drill. You see a big spot here, and then watch it put in a doji, another doji, and then you get long, right? And then as you get long, and then boom, it pops, get out. Take your 50% and get out. You want that trade as a smaller account to work for you right away. You can't not wait. You can't. You have no fucking time. Your account doesn't have time. You know what I mean? Like your account has zero time to wait to grow. So I'm not saying be impatient, but what I'm saying is be so disciplined that, all these alerts that we give and all these trades that we give, you know what? Yeah, we do a great job. That's awesome. But they're not for everyone. They're just not. And you should really understand, like, okay, if my account is a $3,000 account and I'm learning how to trade, should I really be trading 0 DTE? No, you should not. No. You trade 2 to 3 DTE, take SPY, not SPX, keep it closer to the money, take one contract, and try to get 20, 30%. Lock it in. And then do it again. And then do it again. And keep learning and learning and learning and learning. And then through that process, your account will grow, your knowledge will grow, you'll understand what you're doing. Because the worst thing you can do is sit there and fucking slap alerts with your eyes closed and we're handing a bag of chips, we're rolling out of bed, thinking you're going to make a shitload of money, or following these flow accounts, being like, oh, well, 700,000 hit fucking NVIDIA calls and da-da-da-da, well, I should get long NVIDIA. And then it fucking drills 5 points and you're down 30% or 100%. And you're like, well, what the fuck? And then you're like depressed and you're talking bad to yourself. And then you're just like in this tailspin. It's just fucking stupid. Sorry, but it's the truth, right? But we want to focus on what pays money to us. What pays is identifying our risk, identifying where to get in. Okay? We don't want to really take shorts now because what? We have a spinning top here. We have nasty wick, but they're still buying it up. And if we look at the volume down here, it's not bad. It's not terrible. Okay, we have the dingleberry setting up, right? So it's like, I get a little passionate because there's other people that are, I talk to, and whether they're in the room or they're not in the room, it doesn't really matter. But people are very stupid with their risk. Stupid. I'm serious, stupid. Like, it's crazy because this is the funny thing is this. People that have large accounts are not stupid with risk. People that have small accounts are stupid with risk. What is the irony in that, right? I mean, seriously, I'm not fucking kidding. I know people that have multi-million-dollar accounts, they don't want to lose 400 fucking dollars. Then I got fucking people who have, $2,000-$3,000 accounts and they're okay with losing $500. Like, Jesus Christ, like, what the fuck? You know what I mean? Like, so it's just it's important. It's really important. If you want to succeed, whether it's in this room or any room or on your own, you have to be able to manage your money. You just have to.
What 33 is saying, guys, is unbelievably important. That is, even if you are a technical guru, you understand everything. If your risk profile is shot to shit, you're just not gonna make money. It's that simple.
Yep,
Speaking
you'll have
from
a hot day,
experience,
then you'll fucking blow it.
it's consistency over chasing something is the game. If you get 30-40% a day on one play and you grow your account 2 to 5%, 7% growth, compounding growth, 10 straight days is doubling your portfolio.
Yeah, or how about this? Let's take the bad news bear side of it. You take 30% 2 days of 5 of the week, and you stop out for 5 to 10% the other 3 days, and you break even on the week or make 10% on the week, you're still winning because you're learning, you know? And then the next week you come back and you make maybe 3 days, 3 trades, you make 30%. And then the other 2 days of the week, you lose 10% because your risk was so tight, and you lost enough where you couldn't trade anymore because you're in a cash account, right? And then all of a sudden you're like, well, fuck, I still ended the week green, and you learned. Key point, you learned. Okay, it's the habits. So I'm going to talk a little bit about the mentality. It's the habits, the fucking habits that you input into your mind and how you focus on what pays in the moment. Doesn't matter tonight, it doesn't matter tomorrow morning, it doesn't matter on Saturday or Sunday. It's in the moment. Like when you hit the alert and you hit the buy button, that's the moment where everything that we work on, everything that we focus on has to work. And if you're freaking out and you're like indecisive, well, what do you need to do? You need to have a little piece of paper that says, okay, whenever I get into a trade, I need to look at this paper. And then what are we going to do? We're going to go through a progression, a mindful progression to build awareness in how we think and how we talk to ourselves within a trade. Why do we want to do that? Because we don't want to hope. We want to build certainty within the trade based on facts that actually are tangible, payable things. That's it. Because we know, and it's statistically proven in this room, we're going to hit more than 7 out of 10 trades for well over 50%. So if you can take those 3 and on a bad week or day or bad set of 10, those 4, and cut your losses for 10%, 15%, max 20, max, right? And you can lock in 30% of those gains after you print 30%, lock in 70% of that, right? You got 10 contracts, or let's say you got 3 contracts, right? And you cut 2 of the 3 at 30% profit, what is the first thing you should do? Put your stops in at break even. Never let a green trade go red, ever. Put your stops in a break. If you get stopped out and the fucking thing rips, who gives a shit? Move on, right? Grow up, learn to deal with it. It happens all the time, right? But as then the stock starts to move up and that those runners, those 3 runners, those 30% runners, that one runner that you have goes from 30 to 40 to 50. Now, what are you doing? Like, what is your mind doing to create certainty to either A, hold it, or make a logical decision in the moment that says, hey, this is a place of supply and I should probably cut these calls, or this is a place of demand and we're hitting a dingleberry or tingleberry and I should cut it, right? So that's what's really important for everyone in any world. And the point is the reason why this is really important, because this is what the fucking funds do. They do this. Like professionals that are managing billions of dollars do this. For example, AVGO earnings, it drilled into earnings before earnings. My buddy calls me up. Yeah, we just fucking loaded up. My boss is going to dump at the open. Like what? Like, like what? This is a multi-billion-dollar hedge fund buying into supply, or sorry, buying into demand, and then releasing, selling back to balance, what they call balance. It means balancing the portfolio out off a pop, right? And that's what we saw. Let's flip over to AVGO quickly. Okay, let's go look at the 4-hour. Okay, and look, it drilled right into earnings. Drilled, right? Boom, boom, boom. They're not just, oh, we're loading. They loaded, right? They loaded. Pop off earnings, huge pop. They're dumping. They're dumping. Right? That's what we do as traders. We're not like, we don't do this. We don't do this. Nobody does this. Buy, oh, we're in a downtrend. Buy, oh, I'm going to hold. Oh, I just made 30% of shares. I'm going to hold. I'm going to make 30% on shares. I'm going to hold. Oh, shit. I'm going to cut. No, I just made 2%. Like, no. Like, my sister is a perfect example, actually. Really fucking smart person. Like, really intelligent. But when it comes to stocks, she has no clue. She doesn't listen and she has no clue, which is fine. She's getting it. She'll figure it out and she will succeed. But what she likes to do is like a lot of people do. Well, you know what? I'm going to buy here because I like the stock, or, maybe you're a decent trader. You're like, oh, you know what? It's holding this level. I'm going to buy here at 230. I like it here. AVGO is a good company. Down. Oh, no, I'm down. I'm going to hold. Oh, I'm up. I'm going to hold. I'm going to hold. I'm going to hold. Why? Why'd you do that? Don't do that. Look, you buy it here. If it breaks a big level and it's a big level, it breaks, cut that shit. Wait. Okay, now it comes down to another big level. Okay, now I'll add here. You just got 3 to 4 times more shares by cutting for a 200, 300, 400 or whatever, 2% loss, not even 1% loss, and then tripling your position down here off support, and then holding, getting a small pop, whatever, and making money and selling it into that move. And yeah, you got short-term capital gains, but that's more money than you'd be if you held the fucking move down. People do this in the long term. That's what I'm saying. And we're about to enter into a macro situation where, if I'm right, it's going to be generational change. And this is going to be the type of situation where if we hit the bottom area that I'm looking for, you just buy it and you chill and you hold and you don't mess around with it. Okay. In that situation, you want to hang on. Okay. But it's no different than day trading, guys. It's no different than swing trading. If the swing we got 2 months out on the swing, like let's go to UNH, because we're going to rinse this baby up again. So here's how we played UNH. Beautiful, beautiful play. Like textbook, like probably I'd put it in the 90th percentile of my trades because it was clean. It was a very clean trade. What do I mean by clean? Johnny knows what I mean by clean. Right here. I'm gonna throw a supply line right here. Make it thick. All right, so this line, this is, we'll call this the supply line, right? Previous support, now resistance, aka supply. What did we do? Well, we did not hope. That's for damn sure. Okay, we were like, oh, well, you know what? UNH is in the spring and we're going to take calls and blah, 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 blah. We didn't say that. Yeah, we knew that it was, right? Because we have a lot of professionals that are good at Wyckoff. There's like 4 or 5 of us that are solid at Wyckoff. We were identifying this as a spring. But let me ask you, okay, so you buy this as a spring. You don't buy that. You wait till here. Okay. You ain't making shit through this. And that's from February 25th all the way till March 4th. You're dying. Your contracts are dying. These contracts that we got into were $630 a piece. And at this point, they were $500. You lost $130 per contract and the fucking thing walked dead sideways and slowly moved up on April calls. So the reason why it was clean is because we waited and waited and waited in the timing of the breakout. You feel me? We got in, I think, I'll tell you exactly when we got in. Let me take a look at the swings. UNH. We got in at 2 minutes after the open on the 5th. Right here. We got in right here. You guys see that? Right there. This is absolutely beautiful. We got in right here at 5.15 on April calls for the 530 strike. So this is where our entry was. These dropped. They dropped to a low of 4.75. They never went lower. That was the floor. These went up to 10.2, I believe, roughly. That's 100% move on April calls in 2 days, 2.5 days. That's a clean trade. That's what I would consider a very safe, clean trade. We took a trim here, and then we took another trim there. Okay, trim at 70%, trim at 100. It was actually 115%. So, but still, it doesn't matter. Close enough. But like, the reason why it's a clean trade is because we didn't play with this. We waited till the last moment before the break. That's the point. Florida Hokie alerted weeklies right in here because he knew it broke, right? Because he knew we were in April's because we were waiting on the break and boom, it happened and boom, there we go. I thought about, maybe I should be alerting weeklies or 2 weeks out, shorter time frames because I do this a lot where I'll alert a month out, a month and a half out, and they'll just pop 200%, 100%, 300%, 400%, whatever, within like 2-3 days. It happens a lot on the swings. And I thought about it. I'm like, I don't want to change that because the nice thing about having a swing like this that does this, you don't have to think about it. You have so much time that it really needs to break down and get really fucked up, the structure, for you actually to cut it. And if you scale in properly, like 1/3 size here, and then if they bring it down to here, this structure right here, then we'll add another third. Our risk is right here on this trend line. and then we ride that baby up and watch it compress up and shoot up. It came out a little out of the hole a little quick, which is fine because we were already in, right? So that's a clean trade for me. Now, what I want to see is I want to see this thing come back down and either A, hold this trend line, or I want to see it actually break back in and test the breakout here where I have this little purple line here at 480-ish. Comes down to here. First, I'm watching this trend line. And then secondly, I want to see this thing retest, maybe, UTIH out and then fucking rip, right? But I knew it was a right spot to leave a runner here based on a couple things. Look at the 4 hour. Okay, this is not a pretty candle. Okay, and also large hedge funds that bought in here, they're selling up here. That's a good move, right? In a shitty market right now. This market is, yeah, it's a defensive play, but if they're buying in this zone and they're selling up in this zone and then they reload here, I mean, that's still good trade. You can still reload here for the next leg up and then sell back here. Whoops. So we're looking at this trade to do this. Come down, go back up, hit the gap, come down, retest, go back up, flag, and then go. So why would I want to hold through all this shit? I don't. I really don't. It's not. I would rather sell here, reload here, sell here, reload here, sell here. Thank you. I do this all the time. RS knows. He makes these comments. It's kind of funny. It's like, well, he's beating the shit out of Baba again, and it's the truth. Like, we'll go to Baba. We murdered Baba. Baba. Could we have held longer legs? Yeah, we could have done a lot better. Yeah, and we loaded this sucker. Look at this. Go to the daily. We got in Baba here, right there. 84 or 85. Our risk was right around that area. We sold right here into the push. Waited, caught another calls, sold into a push. Waited, and then we missed the big move. That's fine. Waited, caught another pop, sold. And like that's how I like to trade some of these, unless we ladder it. Like, meaning down here, we're like, okay, we're gonna grab, February, March, April, June, July, right? And then we sell February's here, sell some March's here. Wait, then we sell June's here, and then lifts and run, right? That's how you ladder a trade. You don't just be like, oh, I'm gonna hold fucking the whole thing. No, you got to be intelligent with how you play it. Yeah, maybe your runners can keep going and going and going and going. That's fine, but you got to lock in money. Dollar's been playing out perfect. Look at this. I mean, thing's been drawn for a while, since the 27th. Since before China started ripping, this thing was drawn out. Look at that. That's beautiful. So it'll be interesting to see. Like, personally, I think as long as the dollar stays under this level, this kind of supply here at 106, it's going to still support China and emerging markets. PDD still looks pretty solid. All right, now let's get into some other stuff. If there's anything anybody wants me to cover, just let me know. I'll cover it. All right. So let's take a look at some strategies. I got a lot of lines on here. I don't like all these lines. It bugs the shit out of me. But all right, let's take a look at let's talk about a trend line strategy. All right. And trend line strategies are really beneficial. And you know, I'm gonna I'm gonna play into RS's gap fill strats because it's good. So every morning, what happens? All right. Every morning, a a pre-market low gets set after the London Open. We know this. So when the pre-market low gets set, that's our bottom trend line for the morning. Then the next low that's meaningful that holds with a nice wick, that's our next low that we tag and draw the trend line off of. I'm trying to find one here. Okay, let's use this. So you have a top trend line here from Wednesday, pre-close, right? And then you had the London Open right here, right? So you should have had this trend line, this green one, I'll make it really thick, this trend line drawn, right? So what's interesting is as this trend line sets up, you have 100% risk to take off of that. You like, all right, well, you know what, they broke below, all right, unable to reclaim, all right, I'm going to take this short. Okay, well, if you're not able to get close enough to the trend line because this thing broke down 30 minutes, was it? Yeah, 30 minutes before they tapped it, right before the London, that's fine. What you could do too is, let me try to find the trend line strategy. Hold on a second. Find a proper one. You know what? Let me just use the weekly because this is a lot easier and it's a lot easier to describe. All right, here we go. It works on every single time frame. You'll see me play it all the time during the open. All right, so this weekly trend line, let me get out of these EMAs. All right, close. Okay, so I have an October 2023 low as a lower trend line to the massive rising wedge, right? And then in August 2024 low, it's connected. All right, so this would be a tap and go would be like this. You know, here's your anchor, here's your trend line, and then if price comes down, tap, you can define your risk off that algo trend line. Clearly, this is bought by algos. It's not retail, like some people say. And then you can take it long with obviously a daily or minute or 5 minute or 10 minute close below. You take it long. That's a tap and go trend line strategy. I'm going to show you how powerful this is. Everybody thinks, oh, trend line strategy, so stupid, so simple. No, this shit fucking works. Look at this. Get the hell out of this. Okay, I got a lot of shit going on, but here. So here's the weekly trend line. Look at the confluence. Let's go to the 4-hour. Look at the confluence on the weekly trend line. You guys, this massive purple line that I just showed you, that was the October and the October 2023 and the August 2024 low. It's a big fucking deal. You can clearly see that. This is a 4-hour time frame. A wick, full breakdown. And then what they do? Wick it up, closed it below. Wick, candle close, wick, all right in here. 4. Like that's 4, 8, 10, 12, 16 hours of action just in this little tiny spot right on that fucking trend line. That's not a coincidence. And I'm going to show you now. I'm going to tie it all in. Okay. So that would if this thing breaks down, watch this. So now you have the tap and go, right? So taps the trend line. First time it tapped it since August, right? Look at the bounce on that. Boom, shoots right up. That was, I called this actually live. It was, they tapped 12 and I said, I like a long into close. Yeah. And then they ripped it right to 60. That's a 50-point move off the third time they tapped it. And then what do I always say on trendline actions? Usually on the third tap, it breaks, or after the third tap. This is a third, or usually after the third tap, it fucking snaps. Not always, but usually. Look at that gravestone or a perfect doji on the 4-hour that printed last Friday. That makes sense. All right, so tap and go. Easy, very, very basic. Tap, tap, tap. You play the bounce, right? Define your risk, play the bounce. Okay, what's next? The breakdown, right? A failed breakdown. What's a failed breakdown? This is a failed breakdown. You're on the 5-minute chart or whatever time frame, right? Let's go back to this day. You know this is a big spot. You know this is a massive level. Okay, I'm going to zoom in a lot. We're going right back to the same spot. All right, so you're seeing the maybe you didn't catch puts because we did. Actually, this day we got puts here at 59.50 and we rode them. This had an iron condor. And we had Friday 5,800 puts that went from $1,300 to over 8,000 a piece. That was sick last week. So, anyways, long story short, this purple or the this trend line right here, the magenta trend line, is that weekly trend line. They broke it under. It's a breakdown. Then what happens? They print a beautiful dragonfly doji on the 5-minute. Right under it. That's bullish without a doubt. You can take a long risking a close below that doji, right? If the doji's at 9 and you see that print and you get in here at 22 or 18, yeah, you got a little risk, but you can take that long with 1-2 DTE and it's very safe. And then you can catch what is that, 50-point or 40-point long right there into close. That's a fake breakdown, and you identify that based on candle structure and volume. If I look at the volume will be bullish off this dragonfly doji right here, right? And that tells you in the downtrend, when you see that type of a candle, that's a reversal back up, or vice versa. You see it in an uptrend, and it's a reversal back down. Okay, now I'm going to go over something really, really simple. All right, I'm going to quick touch on something. All right, I'm going to pull up a blank screen here, and I'm going to show you this. All right, there's that, and then we're going to go here. Okay, and we'll change. And then what we're going to do is we're going to take this. Okay, I'm going to give me a letter. Week price action. Let me edit that quick. Not rice. Jesus. Okay, and then we're going to do this. Okay. All right. So watch this. It's very, very simple. Very, very important to understand this. All right. Hang on a second. All right. Okay, so these are two different types of patterns. Okay. So this would be a weak one. Ready? This is what price does every time. Okay. This is a stronger breakout pattern. Every time it does this. See the difference? Okay, I don't care if you're doing SMT, DMT, PCP. Price reacts the same because you can look at divergences, trends, very similar. They're very, very similar. And what's interesting is everything plays into each other. Okay, it's all the same. Weak price action shoots up, double tops, or creates a divergences, and then it comes down, fails to make a new high, right? You have a high, a lower high, and then it fails to break a previous support and it flushes. Conversely, you get a breakdown, failed breakdown, reclaim, retest, and then flags, and then fish hook down and goes. The same shit all the time. Doesn't change. All right. That's important for you guys to understand. A little EDU there, and then let's go back now to the breakdown. Okay, now we're going to go to the breakdown. All right, so go to the daily. You know what? SPX would probably be a better look. Not as much stuff going on. Okay. Everyone and their mother was like so bullish right here off this hold. And I said to somebody in the room, I forget who it was like, actually, it was just a retest. They just retested the actual SPX trend line break. Same trend line. Look at this. August, tap, tap, break. And look at the 4 hour. It's hilarious. Literally perfect. Fake breakdown, hold, reclaims, fake breakdown, fake breakdown. Then they broke it down, comes back in, throws in a reversal. Tricky, right? Because this inverted doji on the 4 hour was a reversal, but they were unable to reclaim the trend line that they fake broke it down off of. And now they're so literally you could have traded it as a daily, like, okay, well, they came up, they retested this. Well, let me take puts, and what am I going to do? As long as they do a daily close over the trend line, which would be psych level roughly, one of our pivots, 59.65. That's been a big pivot. Yeah, give me a close over that. Well, they never did. The next day they closed it, almost 70 points lower, and then just drilled it. So that's a fake breakdown and actual failed retest, right? So fake breakdown right here goes up, and then the failed retest. Failed retest is this, where it breaks down, shoots up, and the retest is failing. It's not strong, right? It comes down, breaks, shoots up, tests the trend line, tries to reclaim it like it did over here, and then it flushes. These moves that you get on a failed retest are probably the highest paying moves you'll ever see. They pay fat. All right. Any questions? Trend line strategy. You have tap and go, hits the trend line, bounces. You define your risk off the trend line. On the bounce, typically after the third or fourth bounce, you're looking for a breakdown. And then what you want to see is, if it does break, you want to look for the retest to fail to take it short. And if it price action is looking weak at the retest, then you look to take it short and try to define your risk as close as possible with the least amount of risk. And then you're looking for that big flush and fast move. All right, let's take a look at the market now. Anybody have any questions on that EDU stuff?
Hey, you hear me?
Who is it?
It's OJ.
What's up, G?
What's up, brother? Sorry I missed your call yesterday, man. I was freaking crazy.
Oh, it's fine. No big deal.
Listen, can you just go back to that last one real quick?
Yeah.
The failed breakdown. I mean, the failed.
Yeah, absolutely. Let me go to.
Okay. The where would we have taken the call? I mean, I'm sorry, the put for that.
Okay. So
on that failed one, would I have taken it? Yeah.
So this is what I would have done. You obviously, the first one, you're not taking puts here because you have this inverted, you have a reversal, right? And then you see it reclaim. Once this fails right here, right? You see it come back up and it fails to hold and it comes back down. And then this breaks down. Once this move comes down, so you have a fail breakdown here, pops up, holds, fails breakdown. Then you're licking your chops for a retest.
Right.
Does that make sense? Why is that? I'll tell you right now.
Right. The retest, right? The retest to get puts, but where would I get the actual con? Like, right?
Oh, right here. I'll show you.
Yeah.
Whoops. Hold on a second. Let me pull it up.
In the middle of that green?
Right. After this candle right here closes below the trend line.
Right.
You wait for the candle to close on the hourly or the 15. Let's look at the 15. You wait for it to close below the trend line. And if you miss it and it flushes, then you wait for it to go back up to the trend line and buy it off the trend line.
Right.
Because if you look at it, right, you're trying to get to get in the puts as cheap as possible, as close to a specific key level that you can define your risk at. That's the key part. If you go and buy puts here because you say, oh, well, it broke down, I mean, you're going to have to sweat your fucking nuts off through that, man. Yeah. You really don't want to have to do that. You might as well, for me, based on how I like to trade, I'd rather wait. I'll miss this trade if it just keeps going. I don't care. But I'd rather wait watching this crap and wait for it to come up because I'm looking at this over here, right here. Right? That spot is big. It's a huge area of supply, right? They tried to break it up, make it support, failed, retest, failed, came back down, shot it back up, tried to reclaim and failed, right? So this has failed 1, 2, 3 times. If I give a fourth, I will take that every day of the week. And what I will challenge them to do is close it above that spot right here. Close it above this, 59.65 pivot on the 5 or 10 or 15, or if you have a week or two out, on the hourly, right? Give me that close above, because right now it's telling me that, the last 1, 2, 3, 4, 5 times it has failed to do it, and we're making a lower high, right? That's how you got to read it. You can't just chase the hole because it was a fake breakdown. Wait until it comes back up and price action is giving you actual data that supports taking it short. Does that make sense?
Yeah. Got it. All right, brother. Thanks a lot.
In the moment, you're like, a lot of shit's going on, right? Because you're like, oh fuck, I missed it, da 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 da, right? All that stuff, right? But you can't think like that. You have to slow down. First thing that comes in the mind should be like, okay, where's my best entry? Where would be my ideal entry, right? It doesn't matter what strategy you're using. You have to ask yourself, where's my ideal entry? Where's my A+ fucking entry? A+ right there. That doesn't get any better than that. I mean, you ain't getting this. Let's be real. The way that wick came in, you ain't getting that. But realistically, this is realistic. Why? Because you tested here, you have supply here, support here. That's a realistic test, and it lines up here with this, right? So even if you miss this wick down, you can still get in this area, get in this area, and then you catch this nasty drill. The best advice I can ever give is to say, okay, where is my ideal entry, right? Like, for example, I throw an alert out on calls like Friday, right? Let's take a look at Friday. Let's go to the 15. I alerted calls 58 right at 58.85, or sorry, 56.85, and I said I'm getting in calls, taking weekly calls and short dated calls, risking 56.82. I'm saying I want to get in calls. I alerted them right there, right here, risking 82. That was my Vana pivot flip, right? My Vana flip. So I know it's a big spot. I saw him fail, and then I waited, because people that took this long here, they knew the reclaim was coming. Like, very, 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 very few traders took this, but that's okay, because that's what, 20 points, not even. You get in at 82, we still caught 70 to 90 points on the rip on those calls, right? So when we do that, it's like you're not buying puts, right? Because trends changing. OG, you know this better than anybody. The structure's changing. Doji, wick, and and the cool part is you had an hourly reversal. The noon reversal was perfect. We talked about this live. It was a beautiful spinning top on the fucking noon reversal. Like, how sick is that? And then, okay, well, let me just wait until they reclaim a pivot, right? Because they could have bear flagged it and then drilled it. That's a possibility, but they didn't. They broke the downtrend. We identified risk to here, get in right there, and then everybody else is getting fucking chopped up here when we're scaling up here, And then we hold the runners, and then they keep going. So when you're trading, you have to understand the structure, what's happening with trend, and who's on what side. Is everybody on puts? Everybody on calls? Right? What time of day is it? So Let me go over a couple other things here. All right. Anybody have any questions on that? That was a good question, OG.
Yeah, thanks, man. So what is it printing right now? That's like a looks like a dragonfly. Well, what it printed.
Yeah. Yeah, you could say it's Dragonfly that just printed. That'd be a reversal.
Mm-hmm.
Price is weak though. It's trying to reclaim. Like, oh yeah, somebody asked, how do I draw these key levels off of NFP CPI, right? Did somebody ask that? Yeah. All right. When was data? Let me check. I'll show you right now. I don't do all of them, just some of them. I mean, you can clearly see the NFP low. It's kind of important. I mean, you know, if you're into that kind of stuff. I mean, I think it's important. Look, you know, that's within a point right there, you know, right here. Candle close on it, candle close on it, candle open on it, wick right below it, wick right there, right there, right there, right there. I mean, this is a 5 minute, you know, a wick right there, candle close. Like price is respecting this area multiple times through multiple days. This was Friday and it's respected it multiple times already. Even today it has. The zone. You could call it a 1 to 2 point zone, whatever you want. It doesn't matter. It's clearly important. Let's go to the top side. Here is the NFP high. Never got touched until into close. You know, you have a wick to the penny right here. Other than that, everything over it got stuffed, rejected, rejected. So really hasn't had a lot of action up on it, but this lower one has. So how do I draw it? I look at the 5 minute chart when the candle prints. So let's go here. Here we go. Right there. So here's our data wick right here, right there, and right here. So the 5 minute close, the wick, the top of it, I mark it, NFP high, and then throw the date, and then boom, the wick drills down, NFP low, mark the date, right? Price has memory. You know, it reacts to past. If in the future it reacts to the past structures, obviously. You know, previous supply, previous demand, all have a play in future reactions. Yeah, I'm glad that it's really simple, but people don't really give a shit about it. That's fine. I do. Not a people. Not. I don't even know if anybody even talks about that very much. I know a couple guys do though. So look at this. Now I can define risk here again. Tap, tap, tap. Right? Yep. It's a big deal. It's a big deal, RS. Yep. RS knows. The reason, do you guys know why that's important? Anybody know why it's important? So if they break this trend line and they get over this wick or this NFP low, it's gonna fucking rip, in my opinion. I mean, you got risk here, lower high, lower high, lower high. You know, it's in a downtrend. Well, no more resistance for. It's because the reason why no, it's because this data, the data when it comes out, right? When NFP comes out, what's happening? Let's think about this. When this NFP high and this low get put in, what really is happening? Is that you and me selling and buying? No. It's the algorithms, right? So as soon as the data comes out, it's like people can't push buttons fast enough. It's the algorithms that are buying and selling so fucking fast, and they are making sure that the price does not go over a specific level and that it doesn't go under a specific level unless they want it to blow the doors off of the level and drill. Like, we could have very easily done this. Popped up and then fucking drilled off of NFP, right? So that's really important to understand that, because it's not humans, it's algos that are doing that. All right, so now this week, looking forward, what I'm looking at right now. Oh yeah, before I get into that, I want to quickly go over another trend line and understanding why the simplicity of trend lines is so freaking important. Okay, it's really important. I'm gonna pull up Wyckoff, and it personally, I don't think it matters what kind of style you trade, but oops. I think personally, I think like, using triangles, falling wedges, identifying a trading range. You can see here, this is called a trading range, right? And you can see this is it's not guessing. This is not just a theory saying, yeah, I think that they do this. No, actually, structure within the market behaves like this. There's a selling climax, and you can see it off candle reactions here. You can see that when you get into a downtrend and you get a fast move up, it's usually SC. It can happen on multiple time frames. That actually defines the trading range that you see here, right? In this zone. That's the trading range. Now, what happens is people that don't understand these types of trading systems or these trading schematics, they get chopped up in here, all through here. They have no idea what they're doing. Okay, but people that understand how to look at structure and how to identify a trading range, they understand they're looking to sell up here and they're looking to buy up here. This could be a 40-point zone, or it could be a 20-point zone, or it could be a 100-point zone. It doesn't matter. Now, if you look at it from trend lines, right? Here's a downtrend. Why is my thing doing that? What the fuck is it doing that for? There's the downtrend, right? And I could say even this is a falling wedge. Oh, Jesus. I just did a fib. This would be a falling wedge right there. Okay. Comes down, tap, 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 and then breaks out. Downtrend breaks, and then what happens? It goes out. And now we're in a different trend, right? Now we have another trend right here, right? So once you're long, why is it doing that? There it goes. Once you're long, you can take it long off of that. And once that trend line breaks here, now what? No, you're in another downtrend. It's so funny. So trend breaks. Hold on, let me pull it up. Hate how it does this when I have the. Come on. It's obnoxious. I hate it when it does this. All right, come on. Come on, baby. All right, line up for daddy. What is it doing? All right, that's it. I'm a little irritated by this thing, so get out of this. Get out of this. All right. I don't know why my mouse is like glitching. It's kind of really obnoxious. So I'm going to go to a different chart and do this. All right, let me go to ES. Okay. Pull up the schematic, accumulation. Okay. Okay, there's the downtrend. You can clearly see it. It's not rocket science. And we know this happens. I can give you multiple examples. I don't care what kind of theory you use. A lot of people talk shit on trend lines and they can fuck off because I make a shitload of money on them. And I'll run circles around people just using a trend line, literally just using a simple trend line. I think they're really important, especially for people learning how to make money and understanding, like, when trend changes, right? And a lot of times we know that trend changes around hourly time frames, or we see those big dojis put on the 4 hour, the dragonflies put in, and then we can identify when that trend shifts, right? So when that trend shifts, we can take it long on the break right here. And then what happens? We have another trend line. And then we can even take it on the retest of the previous trend line or that tap, right? 1 tap, 2 taps. Here's the third. Let's take it long. Boom. And we rip, right? It's that simple. Understanding basic distribution and accumulation schematics is really important, because all this stuff ties into gamma and it ties into psychology as well. Like, if we look at it from a psychological perspective, right? Let's go pull up. And I want to tap into the trend line strategy. All right. So go into. So on the trend line strategy, I like to use the 1 hour. I'll pull up a ticker. Let's go. You look at Amazonian. Man, these things are getting pushed away pretty good. So on a trend line strategy, and what fits into Wyckoff is, you can get accumulation within a smaller time frame, but within a daily time frame, you can have a distribution, right? So here's the range, right? UTAD comes down, breaks the range retest, M's out, and it's looking to go lower, right? We know that. We understand that. Now, if we look at the 1 hour, okay, here's the downtrend, right? And here's the EMAs. They're in a downtrend. What would we look for absolute reversal play? Well, we want to see these EMAs start to flatten, curl, and we would want to see price build structure, right? We would want to see, number one, this trading range right there, excuse me, and this trading range right here get defined. All right, so that would be the trading range, right, on the shorter time frames. And then what would happen is this. You'd see price shoot up, break down, come down, setups go back up, come down, spring, and then it goes up, flags, and breaks out, right? That's literally what happens on all the, you can see price. It does that, right? Let's look at previous accumulations and breakouts. Perfect one is right here. Excuse me. Price is in a downtrend with the EMAs. Whoops. My drawing's off a bit. Then it flattens and starts to curl up with the EMAs, right? And if you take a look at the structure, okay, you had a low here set, and then you had another low right there. So this is your structure with the accumulation, right? Comes down, breaks, sets the trading range, SC, AR, BST, accumulates. Then you go B1, comes down, A2. So it didn't spring, but it came down, tested the bottom of the trading range. Here's a test, breaks out, comes back down, BULPS, and then rips. That's a perfect accumulation cycle and breakout. And how do you understand, like, oh man, this is going to break out? Well, this is how you do it right here. You watch the EMAs as they flatten and start to curl up. You can take trend lines, one there, within the trading range as long as you can define it. And we're doing all this for you, so it's not a big deal. Look at this. Okay. Very, very cool. It's a good example. All right. Excuse me. So you have these white lines. That's your trading range, right? Here, here. And it can break below. That's a BST, right? Phase B, ST, secondary test. Then it shoots up, breaks the trading range, comes back in. Then you have the phase D, phase C to D transitions, which is where the accumulation hits in. Sorry, the spring hits in, which it breaks underneath, big bounce up, comes back in, and what does this candle do? Right there. It comes down and it tests. Keyword, test. It tests this area right there perfectly. Right? That's a structure change. Meanwhile, the EMAs are curling up. Now you have this wick here, right? From a B2. And then you have this wick here from A2 spring. So now your structure of your trend lines are built within the trading range. Now check this out. Think I'm full of shit? Check this out. This fits perfect. Fucking beautiful. Look at this. Ready? We're going to go here, slide this up, and watch this. What did I just do? I literally just did this. I defined the trading range, and I went like this. Like that. One. And this thing went like this, actually. Like that. Right? So this, not a spring. That's what I said. It's not a spring. It's called an A2. What's an A2? I'll show you right now. A2 is the same accumulation structure without a spring. No spring. No soy spring. Let me get rid of these lines quick. Doot, doot, doot. All right. That's out. That's out. All right. Now you guys will see it. Watch. Ready? Here. Accumulation. There's your trend line. And these don't have to be perfect. This one, this sets up nice. Wick, 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 boom, right? And then look at the bottom. Trend line. Perfect. You see how it now what's happening? I hope you guys are really paying attention because this is fucking gold, right? So what's happening? Wide, wide, and what's happening? Boom. You know? This is like fucking taking candy from a baby. It's so easy. And that's why I say, like, yeah, exactly. So watch this. Now watch this. You guys saw that, right? Check this out. Check this out. Oh, it's funny. Ready? Ready? Look. It's the same fucking thing. It literally is the same thing. Look. Wide, wide, compression, breakout. Oh, I missed it. All right, I'll grab the retest. Oh, I'll take it long. Awesome. Out. Oh, they retested again. All right, I'm fucking taking it long again. Like, this is so easy to define your risk. It's a joke. Why would you keep taking it long? Well, you know you just broke the trading range. You also know you're in accumulation, right? And you also know you broke the downtrend. And then you also know the EMAs are compressing up, and they're fucking ripping. So you buy the dip. And you can, and the best part is because you've defined your risk here, here, and here, and here within the trading range and the wedge of the accumulation breakout, you literally have multiple fucking entries at the fucking best spot to get in. The best. This is the best. This is the best. Like the best. Like literally the best. All these fucking clowns that are buying here and buying here and buying. No, they ain't the best. This is the best. The best. And it's all from preparation and understanding basic supply and demand and triangles and understanding compression. It's physics. Price reacts and supply and demand reacts the same fucking way every time. So I'm going to show you why it reacts the same way every time. Okay. So the reason why it reacts the same way every time is because when you're in a downtrend, what's happening? Okay. I don't care what you say. Anybody says the derivative market runs everything. Downtrend puts her in control. Gamma's negative, right? Then all of a sudden puts her ripping, and then boom, they start to decay. Rip. Oh shit. And then they start to close out. Now in this zone, there's speculative call buying. What does that do? That increases the gamma. That makes gamma increase, positive. Okay, now puts are being closed, which creates more upward pressure. And then once it breaks, then gamma explodes. That's how it works. Okay, so for example, when you see, a divergence, or there's some people that trade strictly on divergences between indices, right? And that's fine too, right? But it can be tricky because you're waiting for certain things to time up, and your entries have got to be so good. And this is just a very, very simple way to be able to identify that, right? And you would just practice it. You can, there's a lot of guys in the room, or, just send the charts, me, whatever, it doesn't matter, ask questions, learn the shit. Like, this is easy, like super, super easy. And you can do, month out swings and make your 30 to 200% on these things. Because when you start to understand the dynamics of supply and demand, and understand how to draw your trend or your trading ranges, and then understand how to draw a trend line, and then you're like, oh, well, this makes sense because it's accumulation and it's compressing and it's about to go through the full cycle. Why would I even fucking mess with this shit when I can wait till it's about to fucking rip, or buy the retest of the break of the range and then I'll ride that? Like, there's no reason to sit there and dick around with anything else. Like, there just is not. And then you can buy multi-leg contracts. And where's your risk? Well, it's the break of the trading range. It's that simple. So super awesome strategy. You can make a great living doing this, as well as the dingleberry, or the tingleberry. We call it the tingleberry now. It's not the dingleberry, the tingleberry. Yeah, the tingleberry strategy is the motherfucker strategy. That thing's so fucking good. So, yeah. Anybody have any questions about that? All right. Now I want to talk about a couple things coming into the week. We already talked about some of the swings and things that we're looking at ahead for the week ahead. I like oil a lot. I made a stupid mistake last week. I alerted the XOM April 110s, and they almost went in the money, and we cut them for like a small profit. It was really obnoxious. It's about because those things ripped. Bags was telling me, oh, they're selling calls on them, and I'm like, and I got in my own head. I didn't have the conviction I should have, and but it doesn't matter. Who gives a shit? There's always another trade. We had so many in here; it's not a big deal. So let's take a look at XON. This is my mock-up on the daily, based on Wyckoff, based on everything I just taught y'all, literally. So beautiful setup. Like this is how I draw it out. Let me make these things a little more thick. And then here's my upper trend line. There. So this is how I kind of see, I don't not necessarily like the time frame and how it's going to play out, but this is how I see XON moving over the next months, week to months. It's also, a defensive play. Oil drips, tech rips, tech drips, oil rips. So I have this in accumulation. I have a spring already set on the daily, and it's about to. I want to see a test. Like I don't know if they just did the test, which it kind of looks like they did at 105. So this could be LPS, LPSY, which I'd be looking to get in calls off 108 for June. Looking for a massive breakout to all-time high on the bigger time frames. We're looking at the weekly. And this is a breakout pattern, right? So I'm looking for this thing to continue into rip. So looks great. Love it. Love it. Buying volumes, positive. Everything looks really nice. Adobe has earnings. Things going down further to me. Failed breakout. Let's get rid of this stuff. This is from old. I haven't looked at this chart in a minute. To me, I think this thing's going to drill. But this isn't more of the juicier short. I think Ulta is better looking. Look at the weekly. This is a distribution setup on a bigger time frame. I mean, this thing could open up at 260 after earnings this week. That's what I mean, their earnings are Thursday. So I'm looking at this thing to fucking drill. If it does not drill, I'd be shocked. I mean, this is a classic distribution. So I'll be looking to swing some puts actually through this. Small size, because swinging anything through an earnings is really, really high risk. Okay. So because you know what? They could rip it up to, 380 and then hold it and then bring it down. But this is 100% a distribution top. Classic UTAD, M'd out and ready to take the next plunge lower. The next move down should be pretty aggressive. UNH, I want to take this long off the retest and hold a 480. I will not re-enter this until it comes down to 480, maximum 482 on the upper side. That trend line on the hourly here. We see this, matches right up with the 100, or sorry, the 200 EMA and the hourly. Love to see it come back in, cool off a little, gather some momentum back up. Maybe I would ideally love to see it come down to 479.22, hold these wicks and then rip. That's what I really want to see. But I'm going to wait. We're going to take a look at that as we go. DG, Florida Hokie was talking about this. I want to see this come in a little bit personally to, let's call it 79.42. Yeah, that's a good spot. Cool off. RSI's cooked. 84 on the hourly. That's a lot. Like, come on. Even the 4 hour. I'm just sorry. I look, you guys, he may hit this sucker and it keeps ripping and going not bonkers, but like ahead of earnings, Thursday morning, I want to wait. I would rather see this thing cool off, and then we'll draw a trend line here. take a look at where our risk is at. Look at the trading range, and then identify where I want to get in. Like this is how I trade. I'm not interested in just slapping around shit personally. So, he's a great trader. He's going to find great entries. Let's take a look at where we would get in here on the daily. I do love the setup though. That be it? No way. Oh no, this is it, right? Turn that green. So this would be an A2 setup if it is accumulation. So that's kind of where I'm looking at in terms of the trading range. I want to see it a little too fast for me coming out. I want to see it come back in and retest. I would like to see this. I want to see this RSI go like this, and then rip. And I want to see price come back in, consolidate, and then get up and go in through earnings. So a quick retrace, maybe even drill it back into the range down here, and then we could load. That'd be nice. But here, I just feel like it's very exposed and it's pretty risky coming out of the gates like this with this big. I mean, the 4 hours at 70 on the RSI, it's overextended from the signal line. And then you got the price, which is literally, $6 away from the 4 hour or from the daily, 21. $6-7. That's a lot. Volume is positive. So I want to be mindful of that. That's good. It's bullish. So I'll be looking to buy dips on this. Let's take a look at a couple of ones. All right. Later, brother. DocuSign has earnings. I've not looked at this chart in a long time. It's got bullish divergence on the daily. It's broken the trading range. So, This is a big week for software. So this is actually a good long right here. You can define your risk pretty well. The weekly 200's holding. You could take calls off the weekly 200, risking basically $1.50. Not bad. Daily 200's holding as well. Yeah, I think this is SOW on a schematic, so it should go up into the 100 range. I'll have to take a little closer look at it. In terms of the market goes, I do feel like, or not feel, I do think that we're going to go a lot lower. Not early in the week. So what I want to see from the market is this. Let's pull up the 4 hour. It's more fun. I want to see Monday. There's no data Tuesday. Like nothing. Literally nothing. Yeah, it does. So one thing I want to see from the data, or sorry, from Monday and Tuesday, I want to see us go up. Like I really would like to see us go up. Do I give a shit either way? Not really. But I do want to see us continue up to be able to get people trapped long. And I want to see them make it appear like or make it look like we're breaking the downtrend. I want to see them run it up back into the weekly trend line, this red line. I want to see them run it up in there into the 58.70 to 58.55 level. Even 58.34 would be a nice spot to look at. And I want to see them beat people long into Wednesday. And then I would be expecting ISM data on Wednesday after the market opens at 10 a.m. to drill us like nasty. So based on the weekly trend line, what I'm looking at too, for the weekly, I'm looking for pretty nasty stuff. Like I would like to see this happen. See this trend line and how it's so, starting to break down. They shoot it up, they bring it down, and then we do get, excuse me, long day. I would like to see this thing get symmetrical on the weekly, and watch this. I'd like to see that line up. That's a symmetrical channel to me. Pretty close, really close. It's not, it's pretty, really close actually. So this is a possibility. What would this look like on the weekly? April. Oh man. I don't think they're gonna do that. No fucking way. No, 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 no. That doesn't work. That does not work. Nope, that won't happen. Sorry, guys. No, that shit ain't gonna happen. I would like to see it be symmetrical, but that's not realistic. 100% not realistic. Let me get that. That's just that's just not gonna happen. Yeah, they're gonna have to, since my thesis is April 2nd is gonna be the bottom. You have 3 black crows on the weekly. That's not good. That's so bad. Macro is shit. Everything's shit right now. It's nothing bullish. The only thing bullish is retail. That doesn't mean anything. You have the EMAs at 58.65 coming in a steep downtrend. We have not had a steep, let's think about this logically. Why would you be taking the market super long right now when the EMAs, when the EMAs are like vertical? I mean, look at the steepness of that. So any pop into this trend line, you got to short it. It's in your favor. Not good. I mean, we just had NVIDIA ER. We just had Apple. All these ERs just happened literally a month ago, less than a month ago. And the market is reacting negatively to that. And we have all these geopolitical situations happening. Right? Are we going to bottom? Yeah, absolutely. Like that's why April 4th or April 2nd is the date that I'm looking to make some decisions for us all, long term. What would that look like? Let's take a look at the daily here. So we have a range here. Here's the range. That's the trading range we just talked about, a distribution trading range. He just broke it. Now we should get a leg down. Then it should bear flag out, another leg, and then what happens? Go to the distribution chart. Show you guys. Where's it at? There it is. It's the distribution chart. Looks almost identical. Trading range, boom, 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 through, breaks the range right here. That's where we should be getting a big drill. Then it pops up, and then phase Z, drill. And here's the big thing with the market. This is why it could go really low. Because once you do one distribution on the daily, right? So this is a big distribution that's happening on the daily. Once it breaks and goes through this, it's just doing 1M, pops up and drills, it can go through this whole cycle. It can distribute 2 times on the daily. It can't do more than 2. It never does, ever, ever, ever. So when it does drill, it could actually do this then. Pop up, go through this whole thing where it goes like this, up. Let me get rid of this. And then it goes through the whole distribution. Up, down, and then it distributes, and then it goes back down again, right? Or it could do this. It goes, here's the M, drops there, and then it reaccumulates. Let me try this. Here we go like that, and then come down, test it, shoot up, define the range, come down, pop back up, comes back down, set the spring, then moves up, reaccumulate. That's what I think is going to happen. Personally, we're going to see, 5,400 to 5,500 be a zone where we would be getting reaccumulated. And then that would be around April 2nd. And then we would see this thing literally go bonkers, right? And see a new high into the end of the year. I am very convicted and certain that all this geopolitical stuff that's happening is a stage getting set. This is not the first time I've seen this. It's a stage getting set for a some people call it a negative wealth effect. Some people, what, it doesn't really matter. The point is it doesn't a lot of this does not change how companies do business, but the fear and and the fact that I have information from close friends that do buying and selling for large hedge funds that have close ties to Jamie Dimon and the mob roundtable, does give us a little bit of an edge, right? And helps us with timing certain things and understand like what they're looking at, and things like that. So I just think, we're just going to stay patient and we're going to short the pops and we're going to long the rips when things get a little overextended, just like we have been. And we understand that the reversion all the way is available to get us back up to my zone, what I'm looking to short, like 58.50, 58.30. As high as 5,900 max. I don't think that's going to happen, but we'll see. But we'll take it day by day and just keep going on. Really, there's not a whole lot more to cover than just making sure everybody's defining their risk. Understanding how to trade, understanding that they need to be building your accounts. You guys got to be, if it's $100 or $50 a day, whatever your goal is, hit it, be done. Build it up. And then when we get down to this level where we're going to start swinging stuff, that's when it's going to be really, really easy because we'll understand where the bottom's at. RS has got his spots that that we've marked out. Where the room is extremely prepared because when this son of a bitch reverses, we all want to be in multiple positions for the long haul to be able to capitalize on it. Like even if you have $1,000 account, taking like $500 or half your account and putting them on specific options for June, way out of the money, or April or May, even out of the money. That can triple your account or quadruple it in 2 weeks, and that's what it's about. We got to get everybody on the same page trading. There's a lot of great pros, that are in here and they're spending their time and we want everyone to be succeeding, understanding how to make money. The market is very tricky. And the last thing I'm going to say is when we're trading a high volatility market, high vol market is VIX above 19. This is fucking important, okay? Especially for small accounts. This is really important, especially for small accounts. All right. What happens? Last thing I'm going to go over. Okay. I'm going to draw it all out here. Okay. In a high VIX, when the VIX is above 19, do not take calls way out of the money unless you're ready for it to go to zero, right? You got to be careful because yes, you can get a quick pop. And if you get a quick pop, you better fucking sell. Why is that? Because when the VIX is high and it's above 19 and you get calls, what happens to the calls when the market moves up slowly or medium speed? The IV drops. IV goes down. That makes your calls worth less. So premium on the calls goes down. The only way you can get away with out of the money calls is if the IV doesn't drop too fast. How does that happen? The speed of the move for the market has to be fast on the way up to actually increase IV on calls. And the VIX would dump, which would still devalue, but it wouldn't dump fast enough because the IV on the calls will counter it. However, so with that being said, when the VIX is above 19 VIX, you have to play closer to the money. Have to. Very, very important. If you're in calls, only calls. My writing sucks. Only calls. When the VIX is above 19 and you're playing calls, you got to make sure it's closer to the money. Ideally, minimum 30 delta. Ideally, you want it at the money, or you better be buying multiple day time frames. Okay, you can go out of the money 1, 2, 3 DTE, but don't be hot dogging, 150 out of the money expecting to move. Otherwise, you're not gonna make anything. You have to keep it close to the money. It's better to buy one contract. Way better to buy one contract and then have it go 100 than like, oh, I'm going to buy all these contracts and they're going to be, going crazy, but you paid, so cheap and the market can't move that far and that fast. But now on the other side of it, when you're in a high VIX environment, you can grab out of the money puts. Above VIX above 19, VIX plus 19, out of the money puts work. They work really well. Why? Because the same thing. Now you have everything working for you. You have your implied volatility, the IV of the puts. So IV, as the market goes down, IV is going to go up, juicing the puts. Plus, you're getting the directional move on the contracts, sorry, on your puts. There's the directional. So you get both action going. You get the direction and you get the IV with the VIX working for you as well. It's the best. So it's really, really important. So you can go out of the money. You can get crazy. You can go 100 out of the money when the VIX is that high. Because if it gets the move and you get a 20, 30 point move down, those things are going to go 200%, right? Everybody understand that? Really, really important. Really, this is how you protect yourself from blowing up. Yeah, this is good stuff. So, anybody else have any other questions? If not, I'm going to wrap it up there. I want to see a push up into 50. I want to see a push up into 5790 to 50, 58, 55 zone, and I want to short the shit out of it coming in on data ISM on Wednesday after the market opens. That's ideally in a perfect world. If I were to say, hey, I would like this setup, dear Lord, that's what I'm looking for. Push up to 58.50 into ISM, short the shit out of it for just another big leg down. And then we will swing. If we can nail our risk, we'll swing, 2-3 week out options and try to capture a good 200-point move down. If that happens and we can catch it and we time our risk, which is not easy, but if we do, I'm not shitting you guys. You could take $500 to like 15,000. Vince and I have done it. We used to. I've traded with Volmageddon and Johnny and a couple of the other guys for a long time. And last July we took puts from 250 to $7,000 a piece in one day. No, I think it was it was about 7,000 a piece. Yeah, $250, $7,000 one day. See ya. Done that here too. But to have a nice, yeah. So the swings, absolutely, 100%. Some of the day trade stuff, it gets called out on live. I just have to be careful because my shit's starting to get alerted a little bit out of the room. But I'll just say 95% of everything is going to be alerted in the pro trade zone. Anything I'm alerting is going to be in the pro trade zone unless I'm live and I'm going to call and I'm calling it. But if you see me alert, I'll tell you this, PSYK. If you see me alert SPX and it's a multi-day, right? That means without a doubt, I expect the move happening ASAP. So you could take zeros off those. Absolutely. But I'm alerting a multi-day because I want you to be cautious. That's the point, right? Because, multi-day out of the money, yeah, that thing can go. We get that move like we did last week multiple times. You can make 3, 4, 5, 600% on multi-day swings. That's great. Yeah, sure, 2,000-3,000% on zeros, but it's better to be safe making 500-600% sometimes in a high volatility market than it is to be, hot dogging on zeros. Maybe take half size on, multi-day, and buy some time, and then maybe take like tiny size on zeros. And then if we catch it all, then you're banking, right? But if it goes against you, you're not going to get cooked. So that's how I would look at that. But let's be patient this week. Let's let things set up, and then focus on defining our risk and managing our losses really well and managing our wins well too. Locking in profits early, letting our runners run, and having a great time. So I'll leave you all on that. Personally, let me see what we got going on tonight here. Let's see what the fuck's going on with the market. This is garbage. Not a fan of even trading this. Looks like it's going down further. Oh, excuse me. Yeah, looks like it's going to go down. Not even interested in playing futures here, though. But if I were to guess, or not guess, but if I were to say, yeah, if it comes back up to 29.7, I'd look to short this. It could be an IHS setting up off 13. So 13.7, they brought it down. It could fill it out, actually. Yeah, your risk would literally be this candle wick right there. And you can see this set up. So it comes down, builds structure, and then goes back up. That's a possibility. But I'm going to get some good sleep. I want you all to rest up. Let's have a great week and have some fun. And if you have any questions, just reach out. All right. We're here for everybody. We want everybody to move forward at the same pace. Everybody's at their different level, but everybody can learn at the same pace. So, all right. Peace.